Hey everyone, back with another video. This time a very important topic because lots of you guys reached out and asked me what I think about the delisting. So the rumors that are spreading around that Chinese companies will get delisted from US stock exchanges. So thank you very much for all of your questions coming from YouTube, on Twitter, on Patreon and so on. In this video I'm going deep into the question about, well, what I think about it in general. So what is my prediction about this law? Will it pass, and what does it mean for your investments, for my investments as well? I will also talk about two specific cases. Number one will be about NIO, because lots of our audience is around people who are looking to invest in NIO or are invested in NIO, and those kind of people are kind of concerned about having a position in this company. And of course I'm also talking about which was the topic of my last video, about Luckin Coffee, which is actually facing delisting because of different reasons, but is kind of, you know, at the root of why the delisting rumors are coming up now once again. And yeah, by the end of the video I will also talk a bit about more of my general outline about what you should do, what is good investing, what is bad investing, what are some tips that I've learned. So stay till the very end of this video in order to get the full picture. And as always, please hit the like button if you like this kind of information, and also please subscribe to our channel. We now are closely to 5,000 subscribers, which is awesome. Let's make this happen very soon so that we all can become better investors. And saying that, I don't give you any advice about what you should do regarding buying, holding or selling any stock. I'm just sharing my personal history of investing in stocks with a big focus on China, of course. So just take it with a grain of salt. I'm invested in most of the companies here that we're talking about, so I could also be a little bit biased here. But yeah, as always, you need to come up with your own views about your investment. I cannot help you to to manage your risks, but I hopefully can teach you a little bit about how to think about investing. So about today's topic of the delisting of Chinese companies, I actually wrote a little piece, just a short piece, because I have limited time. During the week I'm running a consulting business, and I wrote a brief article that I published on my Patreon page, or our Patreon page. And if you wanna become a patron, it just starts from $1 for supporting this channel actually, and that's also where you can get quicker information about issues like that, because doing those kind of videos actually consumes a lot of time. Today is the weekend, I'm still doing it, but of course I have limited time at hand and I cannot produce like daily videos about it. I'm actually thinking of doing more frequent videos on TikTok, for instance, where you can also find us, but the easiest way would be to either join our network.dongxi.com, or to become a patron in order to get more frequent information if you want to have that. Okay, first, before I jump into the topic about delisting of Chinese companies, I want to give you a brief context about my personal investment history, because it really relates to what I am going to say. And as I'm doing often in my videos, I want to go back and talk about Tesla, which I invested in 2018 and 2019. And this investment actually taught me a lot about how the stock markets work, how to identify opportunities, and actually also helps me to kind of manage my risk in such situations like now the news that we're facing with delisting of Chinese companies. So I bought in Tesla quite early, having an average price of around $200 a share, and I was holding it during the entire time up till now. So if you follow my videos, you will see that I haven't sold a single share, even during the recent crash. I haven't sold a share when it reached $300 a share. I haven't sold when it reached $400 a share. I haven't reached it at all-time highs of $960 a share. Why don't I sell it? Well, the reason is that I have a plan for my investment, and that is that I have a certain amount in my head at which I'm going to possibly sell it, or at least where I see the valuation of this company heading. So I'm not interested usually in doing those short-term trades, and I can say that I can, prove that I don't do that, because I was holding on Tesla during really a hard time in 2018 and 2019. As you can see here on this chart, lots of retail investors were actually quite smart and they accumulated more shares of Tesla. They saw the potential when institutional investors haven't seen it back then. But in my point of view, they made a mistake and they started off selling Tesla when it reached $400 a share. Possibly you want to gain, want to make the profits, cash in, and I'm not saying that this is a bad thing to do, because it's good if you kind of de-risk your investment and you get some profits on what you have in mind. But on the other hand, I don't think that this will reach to something that I'm having in mind usually with my investments. And that is to identifying companies that can actually grow really fast over a long period of time and possibly reach a 10x on my investment. And believe me, it was really, really hard to hold on Tesla shares. There's literally fear, uncertainty, and doubt about Tesla every day in the news. So if it's about Elon Musk smoking a blunt publicly, about demand issues, short sellers attacking Tesla, all of this stuff, and I'm reading about it, of course, as well every day, and it's really easy to get frightened and to get scared and to kind of lose out on your initial investment by selling because of some frightening news. And obviously there's particularly in the normal business media, I would call it, there's usually a demand of being very, not a demand, a tendency to be very skeptical, to be very narrow-minded, especially when it comes to innovation and when it comes to new type of business models. So this is a quick example of my personal background of what I have learned, and I'm now up more than 200% of my initial investment. And even though if Tesla is going down, I'm not selling a share. I'm rather thinking about adding. I'm actually even thinking about adding at current prices because, well, I have this long-term game plan in my mind, and I do think that the valuation of this company in the future is nowhere yet fully priced in yet. Of course, there are folks who are betting to differ on that one, but it's just my personal game plan. And I think if you don't have a plan in your head about your personal investments, then this is one of the first issues you're currently having. And this relates now to the topic of delisting of Chinese companies. So first of all, I do think that the news about delisting of Chinese companies, because, well, they want to force them to comply with the US regulations, is actually nothing bad. Actually, I would, as an investor in Chinese companies, I would welcome it if this kind of law would become true and manifest, because I do think that even Chinese companies would be benefiting from more transparency and less having those kind of accounting issues and, all of these risky allegations about that Chinese are all faking their numbers and data. I think there is, of course, there's truth to it. The latest example, which possibly was the latest addition of why the regulators are now pushing forward, was, of course, Luckin Coffee, which have finessed their finances. And obviously there is some arguments to the case that it's really hard for US investors to have all fairness in actually looking at the books of Chinese companies, and particularly also about how the structure works, that Chinese companies are listing through some vehicles, holding companies, VIE structures are actually not as ideal as it could be. Well, actually speaking, it's not ideal at all, but it's the only way it currently works if you want to invest in a Chinese company, because all of the locally invested companies in China, you can actually not invest because they're only open to Chinese nationals. And for me, this news has been nothing new, actually. So I was not surprised to see it, because if you look at this article here about from the China Law blog, which is written by a US-American lawyer, so he's kind of conservative and actually also quite anti-China. So take it with a grain of salt as well in this direction. But he's been arguing before that Chinese companies and the US, they can go nowhere because there's such a big dispute about how this is handled. And he reported about this notion that, well, there will be new laws get put into place that will actually lead to delisting of Chinese companies. So these rumors were actually around 1 year ago as well. So it's really not that surprising. And actually, Chinese companies that are listed in the US are today already trading with a discount because of the risk that is aligned to investing in Chinese companies. So one aspect of this is, of course, the VIE structure, the variable interest entities, which are essentially the companies listed in Cayman Islands or other offshore tax havens, which are, well, used in order to list Chinese companies in the US. This is not ideal from a compliance perspective and a transparency perspective. So in each of the prospects of those Chinese companies, you will find in the small print that this is the kind of the setting that is in place. In my videos, I'm always talking about this fact. If we talk about NIO, I'm talking openly about the fact that NIO is actually also in this kind of setup, and that it's always risky to invest in such kind of companies because of this matter. So what's now new about this Kennedy bill that is getting pushed forward is that it's actually having some support, mostly from the initiators of this bill, of course, but should also have some support on the Democratic side. And then, of course, with Donald Trump, the China tensions are once again getting stricter and more severe. So yeah, we could see that the likelihood of this bill actually becoming law is now much greater than it has been before. So there's actually reason to believe that this bill will become law. So what would this bill actually mean? So first of all, the bill implements two major points. The first one is that companies would need to disclose their connection to the Communist Party. So if they have, for instance, CCP board members, but if they disclose it, it would have actually no actions that would follow it. But the second one is the most important one, which is that PCAOB, which is one of those players that is actually investigating auditors, wants to get access to those auditors and to the audited books of those companies, and is claiming that they currently don't have it. So if companies will not able to give access to the book and let the PCAOB look once again at the auditors, then the companies will not be compliant with this new bill, and then they have 3 years and 3 times actually within those 3 years if they're not compliant, and until they have to be delisted as a company. Before this actually happens, there will still need to be some things that happen. So number one, it needs to become a law. So the Congress and Donald Trump needs to sign it. And then there is still a lot at stake, because Wall Street and all of corporate America have a stake in Chinese companies. Nasdaq is making lots of money by the listings of Chinese companies. Wall Street is heavily invested in some of those Chinese companies. Also, some of the companies like Google or so on have shares in some of the companies in China. So there's actually a vested interest by corporate America. And it cannot be denied that those kind of players will actually try and lobby against this law in some ways, and would try to, at least negotiate what's going to happen with the exact framing of the law. Also, there are a couple of unknowns related to it. So for instance, what about a company like IBM, which is of course an American company? However, they of course also have an office in China, and they get audited by Chinese auditors, for instance, PricewaterhouseCoopers and so on. So they get also technically audited by a company to which the PCAOB doesn't have access to. So would that mean that even IBM is not compliant with this new bill? So that you see there is a lot of unknowns and question marks actually about how the bill is actually structured and who is going to be affected by the outcomes of when it's becoming a law. So first of all, this means that the outlines and the descriptions of what we get right now in the news about what this law will implement may not be the final decision. I could imagine that even the US government will still want to think twice about what they want to implement really. And first of all, they need to get it passed into law, and then there's still this 3 years time in which the Chinese side can actually try and become compliant. So first of all, the Chinese Communist Party, well, they could start to say, all right, we want to get compliant with this. We also see that it's kind of favorable for our companies as well if they are becoming more transparent. So maybe also this risk decrease factor, which I was talking about, will actually be taken away of our companies, and actually Chinese companies could be actually valued higher in the future. That would be a possible one possible outcome, actually. Of course, the likelihood is not too high that the Chinese government will kind of say, well, yes, we will open our books, because right now Chinese government is seeing those numbers that by Chinese companies as a state secret, and that's the reason actually why the US institutions cannot get those numbers outside of China or actually look at those audits. The second possibility is that the companies that are at stake can actually try and get compliant by one or the other way. So for instance, hiring a US listed one of the big four companies that is auditing the books in order to audit their numbers. I don't know how realistic that is, but certainly that would take off the pressure, because these auditors could be actually compliant with the plans of the PCAOB. So actually that could resolve the problem as well. How likely is that is going to happen? I cannot put a number on that, but it's just one of the options. Then of course Chinese companies could choose to delist. So for once, they could take the company private. So that means they buy out the investors. You will receive cash for your shares, and they just take the company private and maybe do offering somewhere else. They could also decide to go to another stock exchange. So the rumor is now that Hong Kong will benefit greatly from a possible delisting, that because many Chinese companies would just go to Hong Kong, where they can still raise US dollars, and maybe Hong Kong makes it easier for them to list, so they can just accept companies that are publishing their numbers by GAAP standards. So most of the Chinese listed companies possibly can do that, and then maybe they can easily switch, and then they just list in Hong Kong. There are examples out there who are doing that. For instance, Tencent is listed in Hong Kong, having more than 500 billion US dollars in market cap. So you see, it's possible. It's possible to list at another exchange, still having volume in and liquid shares. So it's not impossible to go to another exchange and keeping the stocks trading. Actually, some of the companies like Baidu are officially saying that they think they are undervalued in the US stock exchanges, and are proactively looking to possibly making maybe just a second offering or entirely moving to the Hong Kong stock exchanges. So there is actually some playing around. So actually it will also be a competition between two systems here, and this coming back also to the lobbyists. There will be a big fight between Wall Street, Nasdaq and so on, with the US government, with the Chinese side, and possibly with the Hong Kong stock exchange. So now I'm going to talk more about what this means for your investment, and also personally about my investment, and what you can actually do about it. So first of all, we have seen immense selling pressure, and the prices have been going down about Chinese companies across the board. However, we also need to see that the Chinese companies, they had a really nice run within the last couple of weeks, even outperforming the S&P 500. If you've watched my videos before, I was arguing for the case of this kind of a recovery, and particularly looking at Chinese stocks, because I saw that Chinese companies were actually kind of undervalued because of the tensions between the US and China in 2008 and the trade war and so on before. So I was making the case that actually now it would be a good time to invest in Chinese companies, and in fact it turned around that during the latest weeks, where we had this nice recovery, almost a V-shaped recovery, Chinese companies were doing quite well, and now this kind of a sell-off may also be a little bit of a profit taken here, but at the same time it also opens up a quite good opportunity to possibly look at some of the Chinese stocks, for instance Alibaba, in which currently I don't have any position in, but we've seen that they have very positive earning reports recently coming out, and still losing 5% of their share price, possibly due to the unloading of institutional investors and pension funds, who because of this news need to be more cautious about their investments. But obviously as a retail investor, you can maybe think more freely about what is actually at stake currently, and if there is possibly some opportunity evolving around this. It may face though a really bad situation for some of the run-ups like Pinduoduo or ETFs, which have been companies that have been performing really well during the last couple of weeks and massively increasing their value throughout the last weeks, and now become maybe a little bit too bullish on those sides, and possibly if those companies get a pretty big correction in the future, if you're invested in those companies, you may see a big decline of the share price. I'm not personally invested in those companies either, but I think we could see some immense selling pressure and prices going down in those kind of areas. However, now coming to one of the big investments that I'm having, NIO, which is not my biggest part in the portfolio. I would never put in the biggest amount in a risky investment in a small company, a recent IPO'd company, just like NIO is. However, I know that lots of you are really interested in this company. And of course, we have also seen that NIO, despite very good news in the past, has been, at least trading sideways, but also losing a little bit on the ground, actually pulling back below some resistance base below $3.4 a share, also not trading above $3.7 a share, which have been actually some quite good resistance points before, due to the pressure arising from this. So first of all, yes, NIO would actually be affected from this bill, and outlined as I've talked through all of these points before, with the pros and the cons of this bill passing, NIO might be affected in terms of losing out a little bit on the share price. However, I want to keep you in mind once again my example about investing in Tesla. And also, given the fact that this is a 3 years timeline until this company would possibly be delisted, a lot of things can happen during this 3 years. And if you haven't watched my video about how I evaluate the company NIO, please go and watch it. I'll link it here. And you can see that what is my outline and my long-term game plan for NIO, because I see some potential here. I do still think that there is lots of risk attached to it, but of course with the Hefei government deal, I see also that my risk is coming back down, so I started buying more NIO shares, and at the same time I do think, within a 3 years period of time, there's lots of potential if NIO can actually execute on the plans shown in my valuation sheet, that the stock will be trading massively higher, and possibly despite a discount for the risk attached to a delisting of the company. Yes, if NIO is getting delisted, of course the pension funds, they will sell off, the institutions, they possibly have to sell off. It may create tremendous pressure on the NIO stock price, but in the end, for NIO, it means the same as for the other companies. You still are a stock owner of this company, and there is a certain value of this company. So I like to think, I like to teach you to start thinking about the possible value of this company, right? So if you think the value of this company can increase because they're selling more, because they're becoming profitable as a startup, or because they increase market share and such, then you should ask yourself, is this company becoming less valuable if it's going to and moving to another stock exchange or not? And coming back once again to my Tesla example, should you now think really about what will happen in 3 years' time, possibly, and sell on this kind of news? Well, I personally can say for myself that I'm not going to sell because of such news. Because for me, it's just too short-term thinking. I have this long-term gameplay, and I'm not going to buy shares of NIO now and sell them for $4 a share or for $5 a share. No, I want actually to see this company execute on this game plan. And if they do, I will become a long-term shareholder at this company. It's a different story for Luckin Coffee. For Luckin Coffee, of course, they have kind of been at the middle of the storm, right? Because they have really cooked the books. It's a company that has committed fraud, and they have actually said, yes, we have committed this fraud and we now need to clean up the books. And so they will get delisted. Actually, they received a delisting note, if you've seen it in my other videos, and they will become delisted from NASDAQ anyways. If not, the small chances of that they become that they can convince the NASDAQ hearing committee about staying listed will actually succeed. And now Luckin Coffee by themselves, they accept this kind of fight and say, well, we want a hearing and we want to outline, first of all, our plans and reasons why we haven't submitted this kind of material information. So my personal guess is that Luckin Coffee haven't finished to clean up their books, so possibly they are reliant on third-party auditors that are currently doing their job, and they possibly haven't finished the work yet. So there is no way that Luckin Coffee can come up with cleaned up finances yet and actually sending the kind of material information requested by NASDAQ. This is my personal guess. I could be wrong on that, but that's my current assumption about this. So what they can do now in this hearing is that actually, if we look at the official information here provided by NASDAQ, so they can make a submission, and the submission should be definitive, concise, and directly addressed to the company's plan to regain compliance in the near term and maintaining compliance over the long term. So it should include a timetable for meeting milestones, supporting documentation for any proposed transactions, and financial projections where applicable. If, for example, the deficiency is shareholders' equity, and submission should include a balance sheet and income projections for the next 12 months. So then the company is expected to explain to the panel the reasons for the late filing and should provide a date by which it become current in all SEC filing obligations, together with a schedule of actions to be completed by the company and its auditors. So this roughly gives you a definition of what is expected from Luckin Coffee during the hearing, while you need to make up your own mind if they can actually comply to those kind of expectations. Usually the chances are not very high, and it depends upon the hearing committee if they are allowed to relist or to keep listing actually. So they still need to meet the requirements of some NASDAQ listing rules, for instance, the shareholder equity or the minimum of shareholders and so on. And interestingly here also, I'm not sure if this will apply here in this case, but a minimum bid price of $3 a share. So in this case, Luckin Coffee would currently actually trade beneath that. So Luckin Coffee itself would have an interest to kind of push the share price above that level before the hearing or during the hearing, or outlining that they have a chance in actually trading higher than that. So that's one of the very interesting things around Luckin Coffee and the hearing currently. So similarly to all Chinese companies, they could face the delisting, but first of all, in this case, because of the fraud, they could face the delisting earlier, and once again, they could choose to just go to another stock exchange and list somewhere else, or they could trade over the counter for now, which obviously has effects on the share price in case that there is less investors trading the stock, so there's less volume on that, and that will drive down also the share price possibly, because it will get harder to sell your shares. But I've seen some interesting statistics here that actually lots of the retail investors like you are picking up the shares right now, as it's really trading at very, very low prices, maybe averaging down or becoming a new investor in the company. So it's interesting to see that retail investors are actually jumping at the stock and seeing some turnaround possibility here. So if, for instance, if the committee would actually allow Luckin Coffee to stay listed, or possibly Luckin Coffee moving to another stock exchange and still getting listed there, or maybe a second listing, which is actually also one of the possibilities. So you are allowed to list a second time with NASDAQ. That's also one of the possibilities. And seems like retail investors on average are currently seeing Luckin Coffee a little bit undervalued, which is interestingly in contrast to the big institutional investors here, which have been Lone Pine Capital and Capital Research Global Investors. And as you can see here, they have fully dumped their shares during the recent weeks. So they have now zero equity in Luckin Coffee. Plus also we had the margin call that resulted in Goldman Sachs dumping 76 million Luckin Coffee shares in the market, if they have done that already. So this is also what is actually creating this immense pressure to sell Luckin Coffee as cheap as possible, because those institutions, they just want to get out. So that's why, yeah, Luckin Coffee has been bashed. And as you've seen in my last video, I was telling you that actually I would personally consider buying more Luckin Coffee if it opens under $4 a share. That's when it got halted, or even lower, because I actually personally also think that given the rough calculations that I've been doing and my outlines on the business and so on, it's currently a little bit too much at where it is getting valued. It's in my point of view a little bit undervalued, but of course just in the case that Luckin Coffee actually can survive, that they that are not going bankrupt, that they actually come up with a compliance plan that Nasdaq is actually relying upon and actually deciding in a positive way, and thirdly, that there may be some changes to the management. So for me, Luckin Coffee stock currently is just a gamble. It's not an investment. It's very risky. I'm prepared to lose everything that I put into it. However, at the other hand, because I am really into the fundamentals of the company and I've been reading a lot about it, for me I also see there is an opportunity here with some positive news, because we haven't seen anything, any material news from Luckin's side. So this is the missing part. And if we're now seeing that they are fighting, they want to have this hearing and possibly want to push the share price above $3 a share, because that's one of the requirements to stay listed in Nasdaq, that could also surprise some of those people who are actually betting against the stock or betting that the stock will go to zero. So big speculation here, not investment advice at all, not a good investment currently for a big amount, but certainly some potential investment if you're feeling lucky and if you are, high risk trader. So once again, interesting to see some of the retail investors hopping in at those prices here. So what I would like to teach you with this kind of video is, first of all, how I think about my personal investment. You may disagree with that and you may choose, you may be in a different position, and it's perfectly fine. But for instance, I have been buying during this crash. I also got rid of one of my robo advisors, which is, one of those algorithms that help you investing in ETFs and so on. I just saw that personally what I have invested in my stock picking portfolio was performing so much better, and I'm not a big fan of those ETFs anymore that are just passively investing, but that's also a very risky approach that I'm currently doing. Not everybody should actually trade like that. And I guess my overall outline here is that you need to think about your personal situation, like how much can you actually risk to invest in companies that are highly risking because they are Chinese companies, or that are startups, or that are companies that there's lots of fear and uncertainty around them. And how much should you rather diversify or put into safe investments, just like ETFs, which is personally fine, possibly gives you also a very good return over the years. However, I'm not one of those very skeptical or not optimistic investors, and I actually personally believe that those investors who are, too conservative, they have, yes, less risk, but also in the long term will have less return because they're investing in more conservative asset classes. And well, in my position, I'm still kind of young. I could afford to lose parts of my investment, and later on I could possibly recover. But you need to judge for yourself once again. But yes, investment is risky, particularly in Chinese companies. So don't put all of your eggs into one basket. It doesn't make sense. And if you cannot sleep at night because it's getting too worrisome for you, then it's possibly not the investment that you should take. And for me, what always helps me to stay cool and keep calm during my investing is actually to have a long-term vision on where I think this company is heading. And that's why I do those napkin business cases. That's why I do my due diligence and my research in China when I'm traveling there, when I'm researching those companies, speaking to the executives of those companies, trying their products, looking about consumer reception, like do customers actually like the products and so on. This helps me to get a better feeling and understanding about it. And if you cannot make it yourself, nobody can do that for you. You cannot just follow my advice and investments. You need to make up your own mind. And if you cannot do your due diligence yourself, then you shouldn't go big in and all in those kind of investments, because then in the end this may create some tears. So if you find this all informative, please like this once again, share it with your friends on Facebook, on Twitter, in investment groups, because it really really helps possibly that we as retail investor can navigate through this crisis more effectively. And actually, I do think some of you are quite smart out there and see some of those opportunities ahead, but make sure to not get burned as well. Sometimes you will get burned, and that can also become a good lesson in a way. Think long term, don't act too much on short term news, because if you just buy and sell each day, in the end I think you will have a lower return. But once again, that's just my personal opinion. Thank you guys for watching once again, and enjoy the rest of your weekend. I'm over and out, and see you next week with a new video.